One of the worst feelings as a long-term dividend growth investor is finding out that there's a dividend cut in one of the holdings inside your portfolio. Now, just as of recently, we saw that Walgreens cut their dividend by almost 50%, which unfortunately hurt a lot of dividend growth investors' cash flow on a quarterly basis. Now, in this video, we're going to go through 5 different high-yielding single stocks that have a very, very small likelihood of cutting their dividend anytime soon. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, according to Simply Safe Dividends, the first single stock that has a low likelihood of cutting their dividend anytime soon is going to be Pfizer. Now, Pfizer is the well-known healthcare pharmaceutical company, and it currently has a 75 safe score on the dividend safety reader. Now, keep in mind the dividend safety score is only going to be an estimation. It does not necessarily mean that a stock for sure is or is not likely to cut their dividend, but it definitely does give you somewhat of an idea. Now, looking at some of Pfizer's stats, Pfizer currently is offering a 5.7% starting dividend yield, which is much, much higher than we've seen even in the last 5 years. Now, also important to note, Pfizer is pretty low beta at a 0.45, so the stock doesn't move around all that much, which some investors with a little less risk tolerance might like. Also, Pfizer does have dividend growth, 2.4%, which indicates a rather slow dividend growth rate, but it's still something. Now, Pfizer is currently trading in the $29 range, which is just about as cheap as Pfizer's been trading in quite some time. The next single stock that's offering a massive starting dividend yield and a relatively safe dividend is Bristol Myers. Now, ticker symbol BMY is also in the healthcare pharmaceutical sector, offering a dividend yield starting of 4.6%, also well above the 5-year average. Now, Bristol Myers historically normally offered around a 2% dividend yield, so this is a massive starting yield that some investors are definitely taking advantage of if they're willing to take on the risk. Bristol Myers does have a 70 safe score on the dividend safety score, which does indicate that as of right now, at least the dividend is safe or somewhat safe. And on top of that, Bristol Myers does have some pretty decent dividend growth, a 5.3%. which means that investors that buy into Bristol Myers, at least historically, have gotten paid more and more as time went on. Now, Bristol Myers is trading at $52.23 per share and also has a low beta of 0.41. I also think it's important to mention that Bristol Myers has a dividend growth streak of 16 years of consecutive increases, but maybe more impressive, an uninterrupted dividend streak of 52 years without a reduction. Now, the reason why it's so important to take that with a grain of salt is that even something like Walgreens, which had over 50 years of uninterrupted dividend streak, now just as of recently, like I said, cut their dividend in half. So even if a stock or ETF has been paying a dividend long term, and it doesn't mean that a dividend reduction is still impossible for a single stock. The next high yielder that has a relatively safe dividend that's also been performing pretty good as of recently is ticker symbol VZ or Verizon. Now, Verizon we know is in the communication sector, which has definitely had a few rough 2 years. Now, Verizon's starting dividend yield is at a 6.62%, and just as of the last few months, it was even much higher, upwards of 7 or 8%. But because Verizon is now trading up pretty good, the dividend yield is dropping. Now, with that all said, Verizon does have a 70 on the safety score, which once again is relatively safe. And even though Verizon has had some issues in the last year or two with things like the lead cable situation and higher debt, Verizon's still been paying and raising their dividend consistently. Now, Verizon does also have 16 years of dividend growth streak and 39 years of uninterrupted dividend streak. So it's going to be really interesting to see if sometime in 2024, if or if not, Verizon raises their dividend once again. Another super high yielder with a relatively safe dividend score is DOC or Physicians Realty Trust. Now, DOC is a REIT that doesn't get talked about all that much in the community, but it does have a starting yield of 7.1%, which was much higher before the REIT started to rally. Now, DOC has a 65 safety score on the dividend safety score, which indicates that the dividend is currently safe, but it is starting to get a little bit murky. DOC, also important to note, has no dividend growth, which is something to keep in mind. But with that said, DOC does have 9 years of dividend streak without a single reduction. Now, the last single stock that's offering a super high starting yield is BNS or Bank of Nova Scotia. Now, BNS has a starting yield of 6.58% and a 70 on the safety score. Bank of Nova Scotia also does have some dividend growth, 2.9%. And if you zoom out, the dividend growth has actually been pretty good, considering back in 2004, around 20 years ago, Bank of Nova Scotia was paying around $1 per share per year, now paying over $4 on a yearly basis. Now, Bank of Nova Scotia has an uninterrupted dividend streak of 191 years, making it one of the longest paying dividend single stocks of all time. Now, before I go, I want to go over a few examples of stocks that cut their dividends that honestly even caught me off guard. We talked a little bit earlier about Walgreens, which cut their dividend in half. Then there's a single stock MPW or Medical Property Trust, which also cut their dividend over the last year. Then lastly, we can't forget about AT&T, which cut their long-standing dividends a few years back, which had the dividend community in uproar. I remind us all these few examples just to remember that even investing into blue chip names, dividend cuts can still happen. And just please, please, please be careful. So there we have it, guys. Those are 5 different high yielding single stocks that are all offering above a 5 or 6% starting dividend yield, even after the market's been ripping as of recently. Now, I think it's also important to note that when it comes to dividend growth investing, it's all sort of give or take. Meaning that you could invest into something as safe as Public Storage, for example, with a starting yield of 4%. And with that, you're going to get a very, very safe dividend safety score. Or on the other side, you could, of course, invest in something like ticker symbol BNS and get a 6.5% starting yield, but only a 70 safety score. And this is exactly why, especially for newer dividend investors, it's very important to chase safety and not dividend yield, because it's all fun and games until you're investing into something that has a dividend cut. Which, trust me from experience, I've owned many different stocks and ETFs that have cut their dividends, and it is absolutely terrible. But when it comes to investing into a higher yielding single stock that also offers a safe dividend score, I want to hear from you guys down below. What is your number one favorite single stock that offers well above a 5% starting yield? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.